Hey folks, it's Vic Noble here with your weekly trade example for the week ending Friday, November the 22nd of 2013. In today's day trading world, I found a lot of people get so caught up in thinking that to my mind is far too myopic, and they forget to get a bigger picture view of what's going on. It doesn't matter if you're swing trading intraday or scalping or whatever you're doing. If you're constantly fighting the masses and you're fighting the bigger trend, or you haven't learned to identify places where the trend is likely to end and reverse, then you're going to have trouble. Okay, when you open your charts, move your initial focus to the higher time frame charts, and it can be extremely useful. Just start doing that and try that and see what you see. I'll give you a couple of an example of what I'm talking about, and this is the New Zealand US dollar pair here. And just take a look at the daily chart here and make some price action observations. Notice the reaction levels and notice the candles from that form at those levels. Like this was a support level, it was resistance, and it popped through it here a little bit, didn't it? Yeah, for sure it did. Came down, found support back here again, resistance again, and support at the 8400, the figure level. What's the candle action when price hits it? Is it negative or positive? It's negative, right? And when you take that information and then you look at the lower time frames, you'll find some very good opportunities where we have multiple time frames all stacking up in the same direction. Okay, so that means you have to be patient and wait for that. And if you have a good pattern recognition approach, you can then find the trades that make the most sense, i.e. the trades that are setting up in alignment with that price movement. And what this will do for you is actually tell you the best pattern to be trading. So for example, on this chart, there was this negative candle reaction here and a bit of a bullish day that day, but then another huge one down here. This was on the 20th of November. Okay, and if we go down to the 4-hour chart after that, which is right here, is this positive or negative? This is really negative. This is that 8400 figure level I told you about that we just looked at on the daily. Okay, it's heading straight down. The daily trend bias was coming down into this day, which is Friday. I'll just show you this trade right here. So for a longer term trade, you can use this higher time frame chart information. And when I say higher time frame, by the way, I mean no less than a 1-hour chart. This trade here actually had a rally back up into here and a drop. And you say, well, it's pretty obvious. How would I know to trade this? Go down to a 1-hour chart, and like I said, I wouldn't go lower than this. This level right here is where we're talking about that it rallied up to on the 4-hour chart. I'll show you a few levels here. From the prior day's high to the low, it happened to come back to these different Fibonacci levels. How do you know which one to trade at? I like to watch for the resistance and support levels. This is a 62% level right back into these lows right in here. You see how this used to be such a long time support? Watch this. Put the pivots on. Interesting that there's the M3 daily pivot right there. There is also what's called a sneaky swing in here that we teach. It's actually one of the tutorials that we teach in a recurring Forex patterns course, one of the free webinars that we did. Very, very useful and really cool confluence when you get that. So we had that happen at this exact same level. We had a 2-hour slingshot setting up in here. You know, slingshots and moths are a great confirmation for these. We teach those in the Coach's Corner. It was the M3 daily pivot, like I said. The daily trend bias is down, and this was what's called a Noble entry. This is exactly what we teach in the course, in the recurring Forex patterns course. If you have that course, go look it up, and you'll see that this swing in here, this is a 1-hour chart, but it actually set up a Noble entry for a sell at 82.37, and what a nice move down it was. I mean, that turned out to be a really, really good trade. That happened in the Asian session. We go over this kind of stuff in detail in the Coach's Corner and also in the RFP course, and all of this is scalable. What that means is you can use these patterns on the time frame that suits you. Maybe you're the kind of person that can't be at their computer all the time trading smaller time frames, and that's fine. Okay, in fact, one of our Coach's Corner members is in that position. She can't be at her computer all day long, and even if she could, she doesn't like it. She tried it. She finds it stressful. So rather than try to be someone she's not, she adapted her trading to suit her preferred approach. Okay, that's called taking responsibility for your own trading. This past week, I'll show you here, working off of higher time frame charts, she had a couple of beauty trades, and just had a couple of them. One of them was for a reward risk of 5.6 to 1, and the other was a 6 to 1. Isn't that interesting? Just a couple of trades all week, but huge reward to risk. And the point of it, she didn't have to spend a lot of time in front of her computer. In fact, she said her profit levels were hit while she was sleeping because she had her limit orders in. Well, I'll show you this one here on the yen. It was a 4-hour chart, and she just, because of the recognition in here of what was going on, the pattern, she sold it right up at almost at the very high here. She just missed it, and she was able to do it with super small risk. That was a 2-hour MOF, by the way. Perfect right there. And she wrote it all the way down to here, and that was I believe that was the 5.6 to 1. But that approach might not be for you. You see, maybe you like to be at your computer, and more frequent trading is something that you enjoy. And that's perfectly fine too. You don't have to look any further than someone like Shirley Hudson to see what's possible trading more frequently. She's extremely good at sniffing out pattern trades on a smaller time frame basis. Shirley co-authored the Recurring Forex Patterns course with me. But I'll tell you something. Don't think for a second that Shirley doesn't know what's going on with higher time frame charts, because she absolutely does. She uses them all the time in her trading. But her makeup, okay, is such that she prefers to find several trades each day, and she does it very well. That suits her. Okay, I'll show you kind of sort of an example of the sort of trade she'll find. On the euro yen, you know, I mean, again, look at the higher time frame. What's the daily chart? Is this bullish or bearish, this candle? This is yesterday. That's super bullish, right? That's all-time, well, not all-time highs. It hasn't hit those levels since 2009. Okay, same thing as the 4-hour charts going up. This rallied up today. It pulled back. What is it? That's a perfect pattern number 6. Okay, it was actually a perfect 30-minute slingshot. The daily trend bias is up, and there's also a little sneaky swing in here as well. Okay, so you know, again, one of these little webinars that we teach in the RFP course that shows all this stuff in there. Really nice trade. Another very good reward to risk trade. So there's two contrasting styles, yet each are successful, and each of those styles, Shirley and the other woman I showed you, her trade, they're both very aware of the bigger picture. That's how they find these trades and how they align their trades. See? Really important. Anyway, I hope that helps. And the main idea here is, look, identify key levels on a higher time frame chart, observe price action at those levels, find a pattern to trade off of at that level or near it with small risk and correspondingly big reward. It's a great formula. Okay. All right, I think I'll leave it at that. I hope that that is helpful. Let me know if you have any questions. Have a great weekend and week ahead, and I'll see you next week, end of next week, with another weekly trade example. Take care.